Oh, hey there, welcome back to Living in Minnesota. My name is Joe Carmack, and this is the channel where we talk about all things Minnesota real estate. So it's time for your Twin Cities market update, this time for June 2024. As we usually do, we'll start you off with the month supply of inventory, and if you're new to the channel, you should definitely make sure to subscribe. On this graph, the lower we are, the more of a seller's market we are, the higher we are, the more of a buyer's market we're in. So this is going to show you basically what's going on with seasonality as we go from here to the end of the year. But since we are moving up, we moved up just a touch again in May to 2.3 month supply of inventory. This isn't unusual at all. In fact, this is exactly what we'd expect to see. Now, if you're new to the channel, I tell you that we're typically going to peak on this graph around May or June, give or take. So we might see this one go up again in June just a touch, or we might peak out here. But in any case, this is a little bit interesting because as we're seeing this market trending back, if I give you kind of a line like so, we've been seeing it go like this. I actually would have expected that we were a little bit higher, maybe 0.1 or 0.2 month supply, higher of inventory for this point in the year, but with where we're trending, no real surprises from our April to May numbers. So let's zoom out and look at the macro lens. This is the rolling 12-month average. This is a little bit better view of not looking at seasonality, but looking at where the market is trending. I'm going to zoom out for you a little bit more, but I have seen a lot of news headlines, which we're going to keep referencing in this video because they're accurate in their data, but they're kind of misleading if you're actually thinking about buying or selling a home in a specific area like the Twin Cities. So let me explain what we're looking at here. Month supply of inventory was up 0.1 month supply as I was expecting. Last month I told you, because we've been going on this trend of about every 1 to 2, maybe 3 months, we're going up 0.1. We did exactly that this month. So now I would say we're probably going to sit there for 1 or 2 months at 2.2. That is going to get us back on track to basically where we were for 2019. So we're really liking to see that. I think there's a lot of signs saying that we've since recovered from the crazy COVID effects of what COVID did to the real estate market. So at least locally, I'm feeling like it's pretty safe to say at this point we've sort of recovered from those numbers. And when you hear headlines of things like, oh, our existing homes are on the market, or our sale prices are going crazy, or the month supply of inventory is really high, it's because they're reporting those in the middle of the chaos that was 2020, 2021, 2022. And so when they're saying numbers are up like from 2022, 2023, this is why it's really misleading. It's actually a really good place that we're at in the market currently. Here's what those numbers look like. If we zoom out, I'm able to go 19 years on here back to 2005. That red line there is what would be if we had a balanced market. So in case you thought the sky was falling, it's not. It's just actually trending in a very Minnesota nice Midwesternly gradual curve back. So we really like to see that. You can see on the rolling average, we did go up 0.1 again this month as well, but it's trending back exactly like it should be. Interest rates are staying relatively high. Those aren't going to drop dramatically anytime soon, but with them coming down slightly, I'll show you where rates are at in a second, but that's helping this to be a nice gentle curve back. And as that switches, we're going to see our days on market affected as well. Now, this had an interesting drop. So April was 18 days on market, May was 15. So we did drop by 3. That was pretty significant. If we go back several of the past few years, they only went down by about 1. So down is normal, again, adjusted for seasonality because homes sell faster in the warmer months. However, this does sort of support my theory that we have recovered because this was April 2019 and this was May. So we did see 3 days drop on 2019 as well. That's similar to what we saw this year. So perhaps one could say that we're in a more normal market. The winter still sold more quickly, but I think that we are pretty safe to say that we're recovering nicely. I don't anticipate that this is going to go down much. Maybe we go down 1 more day on market for June's numbers, but ultimately it's going to be trending back up as we go into the winter months, and naturally things just sell slower. The days on market for the macro lens have been pretty interesting because we are still at 18 days on market. This is the rolling 12-month average, not the month-to-month like the previous slide. So 18, we're still there. I think we've been there for 3 or 4 months. We expect that number to start going up. We don't want to be in that extreme COVID-y time of homes just selling crazy fast. So these days are definitely gone, but I would have definitely thought that we'd be trending up more like this. We're not. We're staying flat. So even though sale prices are up and interest rates are up, days on market is still staying down. Speaking of crazy headlines, let's look at the number of new listings quickly, but then I'm going to show you the number of homes for sale or existing inventory or unsold homes I'm seeing as the headlines would read. So starting with the number of new listings, this is a pretty healthy increase. 646 more homes were listed in May than April. That's about 7,000 for the month. So that's a pretty solid number. This is another one that peaks and would be somewhere around here with the trend. So perhaps June will be a touch higher, perhaps it will go down or be flat, but around May is about where we peaked. Last year might have been an extreme with the slightly lower rates earlier in the year, so that kept things down, and then when they spiked towards the end, that's when it dropped us even lower for the number of new listings. So I anticipate that we'll keep trending back over this and the next year, and the 12-month average does support that greater trend, even though it's hard to see in the month-to-month changes. So I do expect we'll see that coming along. This is another one as you're seeing, oh, the number of new listings hitting the market is flooded. Well, that's not even really accurate because it is up from the last year or two, 3 years. However, overall, we're still definitely down in the number of new listings, and that's what's keeping it to be a seller's market. It's keeping it pretty competitive and keeping us from shifting back towards being balanced or buyers anytime soon because the number of new listings is still just low. Homes for sale, also kind of low, and this was the main headline. 18.6 more homes that are unsold on the market. Sellers can't sell their house because of interest rates, whatever. It's really dramatized, and as you saw on the previous slide, we're still incredibly low for the number of new homes getting listed. Of course, then, of those new listings, a certain percentage are thrown into pending when a buyer snatches them up and gets them under contract for sale. And then what's left over is essentially what you're looking at here. So these are the homes that are unsold, they haven't gone pending yet or closed, and they remain on the market. So we are up 18.6 from May this year to May of last year. COVID just had that number extremely low. So we need that number to be going up. Did anybody love when they were competing with 10 or 15 other offers on a property and they're going 100,000 over list and they're waiving inspections? No, like literally nobody liked that except for kind of sellers, but even that was like really fast and chaotic for sellers, and then those sellers had to go buy. So it was pretty miserable of a market. And that's what you're seeing in the middle of this graph here. Those numbers being extremely low was not good for anybody, really. The fact that we're up 18.6 is fantastic. I'm considering that a huge blessing. And it does make the market a whole lot more equitable feeling for people that are transacting in today's day. Here's that same graph. If we zoom out, we're still looking at the month-to-month changes, which is that bouncy ball looking thing. With this one, as you can see, we're not even remotely close to where we had been. Now, to give you some context, this was another extreme. So we're not saying that that should be normal. This was after the market had just collapsed and it was flooded with the number of homes for sale with tons of foreclosures. So we don't want to go back to that by any means. And exactly what a perfect balanced market would be, that's way above my pay grade. All I can say is with that being an extreme, we should probably be somewhere in the middle between where we are currently and where we are in the early 2000s. And we're at least trending in that direction. So as we see this number going back, you should keep seeing headlines of more homes for sale, more unsold homes, more existing inventory, because ultimately that's really, really good sign. That will also be fueled by new construction. So if you're wondering about building, where that's at, supply chain issues are pretty much over. Labor is still pretty tight, but we are definitely seeing new construction builders, particularly the spec builders, the large builders that are building inventory homes. They're able to build a lot more options, which is putting more homes for sale in the market, and that's going to continue to push this trend back towards where we want it to be. So how is that affecting our sale prices? Really what everybody wants to know. First of all, this is your month-to-month change, which is very strange to me. I would not have predicted that we would sit exactly flat from April to May. So literally not a dollar changed on the median sale price around the Twin Cities. 385 is where we're sitting now. Now, before you get your hopes up thinking, cool, prices are going to come down. No, that's not the case at all. If we look at the rolling 12-month average, this one was like equally shocking, but in the opposite sort of way. So home prices went up about $4,000 between April to May in the Twin Cities this year, which is actually the most increase we've seen since about 2022. It did it once or twice in 2022, and then it was kind of more common for the few years prior to that. But in that entire about 2-year span in between, we didn't see nearly those increases. I'm not surprised that home prices aren't sitting flat like they did last year for most of the year. But I will say that was a pretty big increase to see right in there. I didn't anticipate that we'd see a $4,000 increase. So where are we trending in the future? I mean, my crystal ball is so worn out by now, but I don't anticipate that's going to be a normal number. I think we need to get back to slightly more gradual of price increases. But if you've heard another headline that we're going to have to talk about in a future video when I got more time, but they're saying sale prices are the highest they've ever been in recorded history. Yes, obviously, but if you know anything about economics, everything is more expensive. People make more money. All the cost of goods, everything is more expensive because of what's just inflation. That's what the economy needs. And so as you can see, this number is going to be going up. It'll always go up and down, but it's going to trend upwards forever. So don't let that scare you away, because overall the market's a whole lot easier to get into. Not thanks to interest rates, unfortunately. And here's perhaps the most important that all of you guys are wanting to see, and that's where are we at for interest rates. 7.06 is where we're at as of today when I'm recording this video. That's kind of the average between the Mortgage News Daily and the other sources. What I'm really encouraged at least to see is this gap right here. Currently it's about 0.5%. That window is shrinking a little bit, as I've noticed. So if we look over here on the left side, you're looking at the 1-year trends. It is slightly trending downwards. I mean, very slightly. But mostly that gap that I'm seeing is lower and lower. So they're not as extreme of swings. We're not seeing huge sudden peaks or drops. I mean, it's not dropping much, but it's really volatile. It has been the past few months since about the beginning of the year. So I'm at least liking to see that things feel like they're stabilizing a little bit more. We're not seeing a buyer get pre-approved at 6.75, and then the next week it's 7.5, and then the next week it's 6.875 or whatever. That fluctuation is evening out. I think that's giving the market a little bit more confidence, and that's helping everything else to push along. As I've kind of mentioned before, we do expect this number theoretically to have been going down since January through the presidential election year, because statistically, every single year for, I think I did about the past 20 or 25 years, every single year interest rates have gone down. So hypothetically, we should be going in that direction. It's just not really going there yet. So that's what's going on around the Twin Cities. My name's Joe Carmack. If there's anything I can do to help you with your real estate needs, I would love to hear from you. I help tons of people from all over the world, so you can find all my information in the description down below. You can book a consult, download my buyer guide, search for homes, and just about everything else. So make sure to subscribe, because we do these every single month, and I'll see you next time.